It's going to be a busy few weeks, brother. Oh, but I am back.
Welcome to Market Makers, everyone. Your home for tomorrow's TA today. I would tell you that all the markets are at or near all-time highs, but it depends which market you're looking at. The Dow on my screen? Nope, not at the all-time high. The only markets at the all-time highs or near the all-time highs are Bitcoin, the S&P, and the NASDAQ. The Russell suffering. RSP, the equal weight, suffering. The Dow, suffering. So why is that? Because in this cycle, we have the top 10 stocks now account for a 40% market capitalization of the S&P. Just 10 stocks, 40%. To put that in perspective, back in 2000, the top 10 stocks 26% market capitalization. So this rally, despite what they tell you on TV, is actually more concentrated than the rally was in 2000, the dot-com rally, the dot-com bubble, okay? So just keep that in mind because tomorrow we have a huge catalyst with the CPI. The CPI is predicted to come in warmer than expected. Will that trigger the sell-off? What if it comes in cooler? If it comes in cooler, you're going to rally. And I think it'll be a small rally, meaning like to the next level target, because overall, I think we're getting that summer retracement still here in August or September before the big rally up for the blow-off tops. Guys, if you like this content, be sure to take a moment, click the thumbs up, click the like button, click the subscribe button. You want to come hang out with us on the Discord, go to marketmakers.trade. You can join right through our website, and you can join through YouTube for the members only section. We put out a lot of content, a lot of videos for my staff and myself, my education videos. It's all there on YouTube for you to watch under members only. You can click the join button. Live outside the US, check out SimpleFX to be a Market Makers VIP to trade these markets. All right, let's go ahead and start this thing off. Again, here's the down, but let's back up. Let's go to fear and greed. Where are we at? We are in greed again. We're back at 60. What about the Shiller PE? We're at 38, almost 38 and a half. Remember back in 2021, we've been above this obviously, but back in 2021, we got the 38.58. We were above that shortly just a week or two ago. And then we had the nice 26, 28% sell-off in the S&P. But I don't think we're there yet because I think those higher prices are ahead. Remember, all we're looking for, guys, which came to fruition perfectly, was the July top, the market's top, July 31st, Bitcoin July 31st, then the summer drop. We haven't got all of the summer drop yet, just a baby drop and a bounce up with the CPI catalyst in front of us. You look at the VIX, you're at 16.7 on VIX futures, right down near those levels but last seen in December 2024, and this is going to heavily depend on what happens tomorrow with the CPI. We look at the Dow just briefly. You're well off your high. Your high here, your all-time high, 55 or 45,355. You're at 44,144. But overall, you're hitting this resistance of the candle clusters right at 44,422. So right now, you're at a key support level in the Dow. You see this green fractal line right here. The same support level for that top that you had there back in, what was that, February of 2025? You're at that same support level. If that breaks, you're going to see the Dow do its 7.5% retracement. Same thing it did 2024, okay? So let's go ahead and look at this on the RSP. Here's your equal weight, right? Where are you at on this? Here's your high on the equal weight, valuing all the stocks the same. November 2024. You didn't even take that high out. And when you look at this on a 3-day chart, actually, when you look at this on a 3-day chart, you guys see the very mega bearish pattern here. I'll just draw this with the 5-wave tool so you can see it. You have the green line, but this is a massive double top. You see that? Right at resistance of the prior all-time high. Obviously, the neckline down there about 150 would be huge, and I'm not expecting that. I'm expecting a retracement for the next leg up, but that is a massive double top pattern that you form there right at resistance. If you look at this on ES, where are we at right now? Here's the summer rally targets. Literally came to fruition perfectly. 64.36. 65.22. You got to 64.68. You're at 64.14 right now with a big catalyst tomorrow. Overall, I'm looking for a 10% drop, which reminds me, What is that last week? The JP Morgan chief equity strategist for technicals, or whatever his title is, came on and he said this. Lee, roll that clip. It's 1 minute long, guys. I'll talk about it on the other side.
Been asking all day the buy the dip mentality. It certainly has worked. There was some indication last week by some data, I think even out of your firm, that maybe the retail investors getting a little bit tired of buying the dip. You suggested if you do go below that resistance level, and even if it maybe goes a little bit further than that, that you should be an aggressive buyer.
Yeah, so if you look at that 6150, 6200, the medium-term support below that is down at roughly the 5800 and a bit below there. So that's more or less a 10% pullback from the peak. I'm guessing if we do get September, October weakness, that's about as far as it's going to go, and that should be solid support. That's where the market broke out from after the brief basing period that we had in April. And really, I believe it was when we shifted tact on the China trade policy and lowered those tariffs. That's where the market gapped out from. That should be support for the market as we go into the fall.
So you see, his targets that he gave as of last week was a 10% retracement, right? 10% retracement. Now, the difference is, again, gave you these targets 6 months ago. It's just what's going to happen if the cycle repeats as it did in 2023, as it did in 2024, and I think it will here in 2025. So that's what my expectation is. And I'm looking at 5850 to 5800 for that drawdown, have to get through the CPI. And the summer rally hit beautifully, guys. So that would be just a base level retracement to 58.50 at the 382, and then the higher targets ahead. The Archie market top 71.22, or my max bull case 74.42, which I would just round up to 7,000 and 7,500 makes more sense. If we look at the ES here on the day chart, there's a 10.2% retracement. And when you look at it from this perspective, again, what do you have right now? As of right now, you're below the all-time high. If you get the CPI reaction, if it's negative, you're going to see this sell back off, right? You'll see it sell back off, and the key trigger will happen on the ES, which is a S&P futures, below 62.39. If you can get below 62.39, you'll come back up at some point, back test it, whatever. But that's the way to get down to the 58.50, 5800 level, which is what I'm expecting for this retracement before the base, and then the lift off to 7,000, 7,500. That's what I'm looking for. If we look at this on an 8-hour chart, if we do get some upside tomorrow of any type of rally, let's say the numbers come in warm, but whatever reason, the market gets euphoric. This is a heavy environment with retail trading. But if the market gets euphoric, let's just look at some of these levels you could get to based off your current market structure. Oops, gotta use the fibs here. Pull the fib. We look at our expansion ratio. I would be looking at 65.30, right? 65.30. So let's say CPI shocks and comes in colder, you'll get something like that. And what was that summer market top prediction? 64.36, 65.22. That's what I would be looking at as your next key level of resistance. Either way, I still expect the summer retracement. Stretch the rubber band backwards. Let all the big dumb money from Wall Street that all missed out on the generational rally, third strongest turnaround rally in stock market history, they all missed out. So did a lot of YouTubers. Let them all come piling back in after that 10% retracement. Then the liftoff, guys. That's what's going to happen. So if we look at this, actually, let's look at something else here on the indicators. 8-hour chart. If we look at the DVD, the volume divergence that you're getting here, you can see prices moving up. DVD has not confirmed the trend. You want to see breakout on volume. We look at the money flow. You're right at the median line. You want to see that turn up if you're going to get that rally to 65.30. If not, this is going to turn right back down. Momentum on my SMO, my Sigma Momentum Oscillator, is starting to cross. But again, that's a lagging indicator. All of these are lagging minus the volume. That is real time. So that's where we're at. Looking at the S&P, we had our pivot day on Saturday. Obviously, S&P wasn't trading, so I put it out here on Monday. So there's our pivot day, and tomorrow is a CPI. So it's a turning point in the marketplace, down or up. Either way, I think it resolves the same. If you go up slightly or up a little bit to 65.30, right in that range, the same range for the summer top, it's still going to resolve with a summer retracement afterwards. And this can easily sell off starting tomorrow, depending on that number. We look at the spider. What does that mean? It's going to be very similar, guys. 642 is a target. We fell just $1.80 or whatever short of hitting 642. Cool numbers. You're coming up into the range. Hot numbers, you're going to be selling back off. You want to watch 618, right? 618 is when the magic happens. If you break 618, we'll be coming down for that summer retracement. Looking at 580 on the spider. That's what I'm looking at for that summer retracement before the big move up. Looking at the Qs, we hit our summer rally target just like on NASDAQ futures. Right now you're at 575. Just took out your all-time high for the intraday action here. We have 587, next key level of resistance. But again, I would just watch this based on what happens tomorrow. You get more magic happening if you take out below 551. If you get below 551, we got to pull our retracement up. You get below 551, I'm looking at 510 on the Qs for the summer drop if it was to make that move. Let me just measure that. Let's measure that, what that is. See if we get the same ratios here. I mean, that's 11%, 12%, guys. Again, not a big retracement, super bullish, higher lows in effect, massive rally. I don't think you're filling that gap down here at the base down here at 49. I think you're coming down to that 510, right in that fractal low area. You see that 498 coming down right in this area, and you're taking off of the next leg. If you look at NASDAQ futures, same situation. 23,745 as I'm recording. We get the summer rally target beautifully, starting to fade a little bit, momentum and everything, looking at these higher level targets, but I'm looking for this to come down to just 21K. Again, 12, 13% retracement for that summer top and drop. You look at the NQ futures here on the 5-hour chart, you're right at 23,763. You see the resistance here at the 200%. W fractal. You want to learn this pattern? Check out my education series, guys. You can do that on YouTube or through our website or Discord. We're right at 23,763. If we were to get any type of surge tomorrow based off inflation data, the next key level above you is 24K. Watch 24K if that inflation data comes in cool, if the market really likes it. But if not, again, watch the trigger for the downside move based off that CPI. See if we start this retracement. We look at Tesla. Look at this textbook, how this played out. Look at that breakout right above it, right? Now, the thing about Tesla, given the market environment, I've been saying this for a couple of weeks, as you guys know, watching these videos, right? If we look at the volume's giving you this breakout here, momentum starting to turn up. This is a daily chart. But again, what is the upside potential if the market starts selling off tomorrow? I can tell you right now, if the market starts selling off tomorrow, let me just paint you the picture. The numbers come in warmer as expected. Maybe you get an initial rally and then it fades quickly tomorrow or the next day and starts selling off. Your summer retracement starts. If that's what happens, Tesla's going to turn back around. And in that case, I'd be looking at 274, 250, next key levels of support. But to get the breakout, right? Positive side, what if you're optimistic here? Positive side, to get that breakout, you got to take out these two fractals. You got the breakout of your triangle here. Once you take out these two fractals at 357, 367, you have upside targets up here at 426 to see if you could do that. I just think it's a big ask if the market starts selling off. The market rallies some, NASDAQ up to 24K. You could see that breakout and get to some of these higher level targets. So if you like Tesla, watch it. What about Hood? Hood, I have that 120 target, guys. Look at this. Kind of getting there. 117.17. We got the interaction here at $100. Got above it. Oscillated back and forth. And now we're pushing towards 120. Watching 120 on Hood. Massive rally on Hood. 280% off of the April low. Watching 120. May end up being a good trade. Looking at Palantir here, got right up on top of the 200% at 184. You're at 185 right now. Again, massive rally in Palantir. Hood did 280. I forget what Palantir did. It's pretty up there. 180. So 180% on Palantir. If it starts failing below this level, looking at the support structures, you have 162, right around that 145, 150 range. Very nice retracements to get into some of these beta stocks, especially if you're just waiting to play things long. Watch how things unfold here in the near term with the information coming out tomorrow. Guys, hope you enjoyed the video. Be sure to watch my crypto video. Hope to see you on the Discord, and I'll talk to you guys soon. Take care, everybody.